Welcome to Shortview Trading. My name is Chris Watling. I'm the CEO and founder of the Daily Rag Trader. It's Monday, 18th of March, around 9 a.m. London time. This is your morning market hit. What matters for equity markets on a 1 to 2 week basis? If you want to trade equity index futures, S&P500 futures, NASDAQ, FTSE, DAX, other equity index futures, what do you need to look at? What do you need to think about? How should you go about doing that on that 1 to 2 week basis? And the first thing you need to think about is the context of how the market is trading. And in particular at the moment, is the market consolidating its gains or is it rolling over? Is it, for example, the S&P's losing its upward momentum? It's been a really good run since the late October lows last year. Very strong equity market, very strong move to the upside, such that everyone's now bullish. And as you can see in this sentiment chart, the bullishness is pretty pervasive. Everyone's almost all in. So is it that upward momentum stalling, or is it simply that the S&P 500 is just regathering its strength and consolidating its gains? Indeed, if you look at this GIP chart, this sort of 30-day tick chart that we're putting up in front of you now, you can see that the S&P 500 has been pretty much flat since late February, early March. Indeed, the S&P reached the 5150 level around late Feb, and it's actually only 50 odd points higher than that now, which is about 1%. So it really hasn't done much over the last few weeks. Similarly, if you look at the NASDAQ, it's an even longer period of consolidation, tracking sideways. And in particular, it's useful to evaluate how the models have evolved over the course of the consolidation phase. Were they on sell as the market reached its local high? Have they unwound that sell signal and gone back to buy during the consolidation phase? Or is it that actually they're still a little bit toppy, even though the market's tracked sideways? Watching all of that is critical. As you can see from this Philly Sox technical scoring system we're putting up in front of you now, it's been unwinding its sell signal and it's now back on buy. Similar comment, for example, with the NASDAQ technical scoring system. Again, it's now back on buy. All of these models are really quite interesting and part of the puzzle that we put together to try and work out how the market's going to evolve over the next week or two. Another part of the puzzle is what are the key events coming up? How might they influence key asset prices like the dollar, gold, and how does that fit into the equity market? And of course, over the coming week, it's the critical central bank week. Most importantly, the Fed, their next monetary policy announcement on Wednesday, they'll update their summary of economic projections, and of course a press conference from Jerome Powell. All of that's critical as to hints as to when their first rate cut might be, what they're going to do with QT, and what happens to the long range expectations for interest rates when you look at the dot plots that are included as part of the summary of economic projections. So all of that needs to be factored into thinking and thought about when you're thinking about how should you trade this market on a 1 to 2 week basis. And if you want a full update from us and you want to take a free trial of our product, please click on the link below. We'll send it to you for free, no credit card details required. We just need your name and email address, and then we'll send you that for free to see if it works for you and enhances your ability to trade equity index futures on that 1 to 2 week basis. And if you're a subscriber, it should be in your inbox by around 8:30, 9 a.m. London time each and every morning. So what are we watching this week? Well, there's a ton of key themes. First of all, as I mentioned, it's central bank week. The Fed, of course, critical Wednesday, but so's the Bank of Japan on Tuesday. There's discussions and a potential possibility they may hike rates this week, or indeed hinted it over the coming weeks. On top of that, you've got the PBOC Wednesday, you've got the RBA out of Australia, and you've got the Bank of England later on in the week on Thursday. So a big focus on central banks and what they're getting up to. We're moving towards those first rate cuts, so lots of updates from many of those central banks. Then there's secondly a theme of US housing data over the course of this week. We've got NAHB Home Builders Index, starts and permits and existing home sales coming out over the course of this week in the States. All of that will be watched closely. And then finally, there's flash PMIs later this week. This is the first take on economic activity in March across the globe. So an early insight into how March is going. And there are one or two other pieces of interesting data across the week, including UK inflation and German IFO on Friday. So that's it from us. If you want to hear more detail on key events over the course of this week, sign up for the intro on our website, where we'll send you our State of the Markets week ahead email every weekend to give you a sense of how next week's going to pan out, what matters, and what are we seeing in markets. Equally, if you like this video, please subscribe. Simply click on the subscribe button on YouTube. Follow us on social media on LinkedIn, Twitter and/or Facebook. And please like and share across social media. So that's it from us. That's your morning market hit for Monday, 18th of March. Stay safe, trade well.